All right. Next one, guys, here we have housing market forecast for 2025, housing market prediction. So this is more the prediction part of today's show broadly, which is, look, we've had climbing house prices for years. We have elevated mortgage rates that are kind of being sticky. So it's been a while now that we've had prices where they're at. Now, the change has been that there's more inventory in the market, but that inventory isn't crushing prices. Now, there have been several articles and a couple other news outlets that have tried to suggest that there's impending doom and that there's a crisis at hand, but we don't see the crisis yet because everyone that is in a house that is selling, they have lots of equity still. So, when I kind of think about this, they use the term here, hopeful home buyers. Yeah. And I like that term because I think that's also our student loan people we just talked about in the last segment. They're hopeful home buyers. And even folks that don't have student loans that want to buy a house, they can still be a hopeful home buyer. It's just about the qualification part and economically figuring out where are you in the mix of all the things that are happening with prices holding where they're at, inventory on the rise, and mortgage rates kind of flat, if you will.
So you mentioned that inventory is up, so roughly about 30% year over year. And one of the things that I would encourage that I feel this is a great opportunity for is use that increased inventory to your advantage. What I mean by that is shop patiently. If you know that you're going to be buying a house, take this time to make some runway for yourself going into the summer. See what that market is looking like. Get your cuts in, but also be wary that if you're able to move quickly and a deal comes up, be quick on your feet. But also use the time on the market to negotiate better terms. Andy, you said the prices are still sticking. They haven't dropped really pretty much, but use that information. If you know that the prices are staying, houses are on the market for a little bit longer, then maybe try to negotiate a little bit better terms for you. Go for it, ask away. And if you get an answer is no, then hey, that's where the negotiation starts.
Yeah, no, absolutely. Absolutely. I like here where it says that thanks to climbing home prices and higher mortgage rates, it's been a tough few years for housing market. So true, guys.
Yeah.
The great thing about this article is also predicting, like it's giving us we're going in the right direction here. Mm-hmm. So it's like kind of, and I put it right here, Brian keeps saying this, buyer prepare, right? Buyers got to be prepared. Brian, you've been giving nothing but good information, and you're absolutely right. Gradually, we've been seeing more inventory. So more inventory just gets you to better negotiation terms, And then the other one is affordability remains challenged. It really does with the high interest rates. But the market are also predicting that interest rates should actually be a little more favorable as the year ends, which is great. The other thing is, buyers stay flexible and watch rate trends. That's a recommendation and a takeaway from this article. And the inventory shifts closely when planning to purchase. So just keep your eye on the market. Keep your ear cling to what's happening with interest rate. And I put right there, like I said, Brian keeps saying this, buyers prepare, just be prepared and put yourself in a position to win. Don't wait till the last minute, because once the interest rates start going down, what's going to start happening is there's going to be more people wanting to buy. They're going to get off the silent and they're just going to rush to it. Mm-hmm. And then there goes the prices. Because still, even though inventory has increased to, according to Altra's research, to 156,000 homes available, that what's going to happen is when the rates go down, you're going to start seeing deterioration on that. There's just going to be more people, hey, I could afford this. I might as well take it now. And, now just know that the interest rate is something I'm going to be able to refinance down the line.
Yeah, the price is the price you get once. The rate's something you can adjust along the way if you have to. It's about getting in if you can. And, I want to remind everyone, every seller's situation is different. You're going to find some sellers that are a little bit more desperate because of their life need, their financial need, or whatever. And you're not going to necessarily that's not necessarily going to be disclosed to you. But, tuck that in your back pocket. Remember that when you're going in, you're trying to make a bid, you're working on closing cost scenarios, or you're working on trying to get some concessions or something like that. Just remember, there's going to be sellers, especially in the rising inventory environment, that they have equity, and the decision they're making is just how much less am I willing to take to get this deal off my plate to go solve the other problem I'm having in my life. I got to move because of work, or I'm moving my spouse into a senior home, or I got to pay off all this debt, or whatever it is. Not everybody is going to be able to hold on to the luxury of the golden handcuff, low rate environment that they got when they refinanced in 2020 and 2021. Some people's life situation just isn't going to add up to be able to hold that forever. So in that situation, beware, number one, and then be active and keep your feet moving like a boxer in a ring. Just keep those feet moving, keep those hands up, and then boom, take your shots when you can get them.
I like that, Andy. I mean, homes are predicted to go up maybe 1 to 4% this year, and I think you got to act before prices go up. If you're in the market right now, don't wait too long hoping for a major price reduction. If it makes sense right now, get in, because down the line you'll have opportunities that's going to make your situation better, refinancing or building equity a lot faster.
Yeah. Well, to your point, you're saying that home prices are going to continue to go up. Fannie Mae predicted a 4.1% increase.
Yeah. I had
which
to
is
range
pretty
1.3
crisp.
to 4.1.
Yeah, and then Mortgage Bankers Association 1.3, which is way down. But then you come the National Association of Realtors coming in at 3%.
So what does that tell you? That
three
all
big
of them are
agencies,
positive.
they're all saying positive growth, and even if it's slowing, it's still in the positive direction.
Exactly.
So again, the data in the end is going to show whether or not that prevails or becomes true. But even if the median price goes down a little bit, which it has over the last couple of years, it's got to tick down just a little bit. Not numerically super significant that it's hair on fire, everyone run for the hills, but enough to kind of get a headline out of it, but nothing more, because really it just comes down to even these variables are saying that all these associations are trying to be predictive that, and it's not because they're trying to sell you on the idea. Everyone's going to go, oh yeah, of course they are. There are housing associations. Okay, sure, fine. But then if they've said that year over year over year, and it's been true year over year over year, at what point are you going to say, well, they're just true still, or they're just trying to sell me into the idea?
Yeah, no, exactly.
By that time, you already bought in.
You know what I'm saying? Like, I'm not trying to diss people. It's just like, at some point, you kind of have to come to qualms with it and go, okay, look, either they are predicting this accurately, even if they're hedging a little bit on the positive side. If it's still neutral even, then that's good. That means you waiting longer to try to get a price that's 5% below market or 10, that may not come around.
Absolutely.
I really feel, I was talking to one of my realtor partners and I asked him, well, what are you seeing out with buyers? What obstacles are they running into, or what are they telling you? And he said, honestly, like they're afraid to get pre-approved because interest rates. And I said, okay. And I feel that it's just more of a personal belief that, hey, I can't get pre-approved, or hey, I don't want to buy right now because of these headlines. And at some point, all these headlines are just diluting what people's decisions are going to be because of the fact that every week something new is coming out. So, hey, if that's you, I say attach yourself to something that, you can get behind and follow that, because in a world where there's so many things coming out at once, well, what can you believe in? Find something that is, how do I say it, connected to what you are aligned to, and then just stick to that, because there's going to be so much noise, but just focus on what you're able to do in and day out.
Yeah.
No, absolutely. What I got out of this article was I put the pros and cons. Rates may dip. Is that a good thing? Absolutely. That's what we all need.
Yeah.
We need that confidence. And so just hearing that is just giving us a confidence, knowing that inflation is lower. Annual inflation is lower this year. The last time we saw this was back in 2022. So this is also great news. The other thing that we're seeing is more inventory. More inventory, like you mentioned earlier, 30% more nationwide. That's a good thing. Yeah. We saw it. We've been seeing it a lot more here in San Diego. I want to say that, don't quote me, but it was like 65 to 70% more inventory. We're starting to see Texas the same thing. Mm-hmm. They had about 45% more inventory. Las Vegas started having more inventory. Florida, and we can go on, the list goes on. Yeah. But that's a good thing for home buyers. That brings stability to home prices, which is the next one. Slower price of growth, right? Now people don't feel like they're getting bid out.
Yeah.
Otherwise, it's just, I'm getting bid out. I go in there and it's like, how do I compete with this when people are putting $50,000, $100,000 more than I can because they sold their house in San Francisco. Now they're coming here, getting a second. They're buying it pretty much outright cash. And then to your point, better negotiation power. Now we can actually negotiate better terms. Can you give me a 2-1 buy down? And my rate's going to be 7% right now, which is pretty much the national average, about 7% for conventional. Well, I can start at a 5%.
Yeah.
You can negotiate that. You can have your realtor negotiate that then. And then buy now, refi later. Again, the whole cliche, don't marry the rate. Marry the home. Don't marry the interest rate.
Yeah.
So
this has a lot to do with just trying to hedge the market and time the market. It's not going to be perfect. It's only by looking back in the rearview mirror can you go, oh, the dip was exactly this month in this year. You never know that until you get beyond it far enough to see that on the graph it kind of bottomed out. And there may not be a bottoming out this time, guys. All these comparisons to 2008 and how rampant inflation of home prices went and all this and that. There was financing then that we don't have now. There were conditions then that we don't have now. So the fact that a couple variables look the same doesn't mean that everything under the surface is the same. And that's, I think, making this a little more complicated for people because they're kind of hearing over here like, oh, well, maybe this is going to collapse and crash like everything else, but it's not the same function. It's not the same thing. Yeah. And, you know, you're talking about inventory. You mentioned Texas a minute ago. Like, Texas pulled the most permits back in March. We talked about this a couple weeks ago. Like, 15% of the permits that were filed to build homes came from Texas. Yeah. So out of our 50 states, one state accounted for 15% of new permits, and the state that had the second most permits was 9%. So the two of them together, equivalent is about 25% of all the permits. Two states pulled them. Wow. So there's more inventory coming there. And then mentioned here, the silver tsunami, which I love it. I like brand new terms, right? So the silver tsunami, for those of you.
Baby boomers.
Yeah, these are the baby boomers who are going to end up selling their house because this is what I was saying a second ago. They either need to, lateral move, go from a 2-story to 1-story. They need to size down maybe, or maybe they're moving it all together and they're going to a senior care or some sort of other living community and they're going to get rid of their house. Well, there can be inventory in there too. So I think that my prediction is, again, end of summer or end of spring into the summer, I think you're going to see a lot more activity. And also the Fed keeping their foot where it is planted, even though I disagree, I think they should drop their rate now. I think that when they finally do drop their rate, that's going to be a signal to everyone else kind of sentiment-wise, it's go time. And I think that is when you're going to see a lot of this extra inventory get absorbed. Rates are going to ease up a little bit, and then we're going to see a more healthy housing rebound.
Absolutely. I agree with you 100%.
And Jerome Powell will be praised.
Yeah, that's it. You're talking about that, which brings me to the next thing with the cons, Andy. And it's still expensive. It's out there. We're still seeing, home prices elevated. The other thing is going to be rates still elevated, but at least we understand that they're going to come down, right? So that's one of the cons with that. Economic risk, inflation, right? We don't know what the tariffs are going to do, so we do run that risk, and that's why I think rates have leveled off where they're at because of that. But once we start seeing that, oh, you know what? We already have agreements out there with other countries, we should be okay. As a matter of fact, you brought up the point earlier this morning about our credit rating. That went down
we got degraded.
We went down from AAA to AA1.
Shout out Moody's.
Yeah.
And again, that's all speculation.
Yeah.
It's all based on speculation.
Yes, it's an opinion, number one. It is backed by some variables that they measure in order to apply that rating, just like we do in FICO score. But the other thing is that I'm not sure if it's really a lagging indicator as much as they want to say it is or not, because I think that's just more of a look backwards and blame the other guy kind of thing. But even then, overall, does that hurt us? Look, the issue isn't hurting. The issue is, in my opinion, it's more about how do we get to here now? How do we go from 19 trillion to 38? Exactly. Not how we're going, 38 to 42 is the problem, or 38 to whatever. How do we go from 19 to 38? I mean, I know how. I know the answer. Please don't. I know. If you know, I know. I know the answer. But we doubled our debt in 5 years. That's a big-ass problem. And again, I'm not going to backwards blame either, but now isn't the time to cry foul. It was back then. So we're really super late to that party, if you will, and I'm not surprised by the downgrade. I don't think it's long-term going to hurt us because the problem at large is way bigger than just this one rating thing.